Hi, this is PR Sundar. Welcome to Dalal Street Week Ahead program. Let us see what happens globally. When we say globally, it is only US, nothing else. We all follow the US markets. And US markets are really very bad. And Dow has fallen 650 points on Thursday and another 880 points on Friday. So that is about 5% fall in just 2 trading sessions. And 5% fall in 2 trading sessions is something really very big. And that too after falling so much already. Why? The reason was simple. The inflation data came at 8.6% versus the estimation of 8.3%. And moreover, this 8.6% is the highest in the last 40 years. So it was very difficult to trade this event because expected inflation was 8.3. If it comes 8.6, then Dow will fall 3%. Had it come 8%, it would have shot up 3%. So either way, it's going to make a big move. And I've been warning you that to keep the positions very light. And I also said on Monday, either there is going to be huge gap up or huge gap down. So now it is very clear that it is going to be huge gap down. SGX Nifty indicated about 170 point gap down, but we have to see tomorrow. Most of the time, the Asian markets may not be reacting as bad as the US markets. So in case if Asian markets reacting less negatively, then like instead of 170 point, we may open about 120, 100 point. But we do not know. But right now, today is Sunday, the global markets are closed except 1 or 2 markets like Saudi Arabia and Israel. So Saudi Arabia market is down 2%, and that in my opinion, it's a big reaction. And because Saudi Arabia is a country where most of the companies are related to oil, and anyway oil prices are good and it should trade good only. And of course, Israel market was closed on Friday. So because of that, it's 2 days of negativity has to be factored in today. It is down nearly 3%. So only question is that how much we are going to fall. So there is no question of market moving higher. So this is going to be very difficult because I said from Monday onwards, our markets may stabilize. And that was based on the assumption that, the US inflation will come either at the expected level or better than the expected level. Now the inflation came worse than the expected, and the volatility will continue for next few days also. Why? And now people are speculating whether the Fed will be increasing the rate more than what is anticipated. So first thing is that what was anticipated, and the expectation right now is that 50 basis point hike in the next 2 meetings, one the next week, the next one the next month, and then followed by 25 basis point hike. But now with this higher inflation, the Fed chairman may indicate they may even go for 75 basis point hike maybe in the next month. They may increase 50 basis point this month, and they may increase 75 basis point on next month, or they may say 50 basis point hike will continue for more than 2 consecutive months. So some hawkish comment is expected. So when that hawkish comment comes, and again market will fall. So market fall is just like a vicious cycle. I think earlier I also told you some FIIs sell, and then they take the money out of India, the currency depreciates. When the currency depreciates, some more FIIs get scared and they sell. So this vicious cycle continues. And that is why, I always say Newton's first law, a particle moving at a speed will continue to move at the same speed unless acted upon by an external force. So FII selling will continue to sell until something changes fundamentally. But right now, there is nothing to change fundamentally. So the more and more FII selling, the more and more outflow, the more and more rupee will depreciate, and that will have more and more negative effect in our market. So in the market from 15,700, it went higher, it went almost to 16,800. So now that is very, very clearly, it's a bear market rally. So the way, like in a bull market, corrections are fast and furious, in bear market, relief rallies will also be fast and furious. So I think now the bulls will try to defend 16,000, and we don't know how much they'll be successful. So if they cannot defend 16,000, then the next support will be only 15,700. So markets, you know, it does not matter whether the Nifty breaks 15,700 or not. As long as, you know, it's moving gradually, no problem. But look at what happened last week. Nifty went to 16,250 in just one day. From 16,250 it went to 16,500, and then in just 2 days from 16,500, you know, now it's coming closer to 16,000. The huge move, 250 point, 300 point every day, and that too not on one direction, on both the direction. So that makes trading very, very difficult. So the only way to survive this market is to keep the position sizing very, very little. And sometimes I feel like it better to stop trading for some time, maybe for a few months, until the market stabilizes. So this period of volatility, I can say, is worse than Lehman Brothers collapse and coronavirus. Even during Lehman Brothers collapse and coronavirus, the markets were turbulent for a few months, 4 or 5 months, and then after that started stabilizing. But we are already into so many months, I think more than 6 months of huge volatility, and then there is no signs of that volatility subsiding anytime soon. So definitely it's going to continue for at least 3 to 4 months, as long as this debate continues, the Fed rate hike, this and that. So next few months is going to be really treacherous month. So during 2020 and during 2008 also, people who have invested during the crash, they've been rewarded very well. But I don't think that that is going to happen now. And you know, so this is going to be, I can say this is the worst bear market in the history of Indian stock market. So coming back to our market, so Nifty has taken out 200-day moving average, then 50-day moving average, then 20-day moving average, right? So everything is taken out, and our market is looking very, very bearish. And tomorrow Nifty is likely to open about 100 to 150 point lower. Now what is going to happen after that, that anybody's guess. And what happened yesterday, it opened 200 to 50 point gap down yesterday. It was trading and sideways, and then closing after 1 o'clock. No matter where the market, the FIIs will come and sell after 1 o'clock. It fell another 40-50 points. So the expectation is that, you know, tomorrow's gap down also, there may not be any recovery. But what I observed in the last few days, the days when DII's buy is more than the FII selling, and there was recovery. And because when the market comes down, people short heavily. So when DII's buy more than what FIIs are selling, then the short covering sets in. So in case if DIIs feel that, you know, market is coming to 16,000, which is a psychological support, and if they want to invest aggressively and to support the market, then we can expect some kind of recovery. But then as long as the global cues are bad, I don't think that they will also be doing that, because otherwise they will keep burning their fingers. So definitely bulls will try to defend 16,000 tomorrow, but then again that is the story of tomorrow. We still have 4 more days for this week, and particularly Wednesday, the Fed meeting. So on Thursday, once again, it's a big problem, gap up or gap down. So in a normal market, and IT stocks tend to do well as and when there is a depreciation of the rupee. But now rupee is all-time low, but despite that, even the IT stocks are not doing well because Nasdaq is falling, the IT is also falling here. So the market sentiment is so bad, even the defensive stocks are not able to sustain and they are also selling off. And usually this kind of bad times, IT stocks should do actually very well. You may remember in 2008 to 2014, it was such a big bear market, but all the pharmaceutical stocks did so well. In fact, many pharmaceutical stocks have become multi-baggers. The Sun Pharma, from 100 rupees, it went up to 1200 rupees. But now this is the time everything is falling. Defensives are also falling, growth stocks also falling, and everything is falling. So that's because the sentiment is really very, very bad. So looking at the open interest, on Friday, there was a huge addition of open interest in 16,200, 16,300, 16,400, 16,500 call options. Aggressive calls have been written, but there was hardly any put writing. Those put writing have been done a few days before, but I'm talking only on Friday. On Friday, there was hardly any put writing. There was only a huge call writing. And 16,200 call was trading around 200 rupees in the first half of the trading session. So assuming that those smart people would have sold it in the morning, their break even works out to be 16,400. Even on a closing time, 16,300 call also trading around 110, 120. So their break even is also around 16,400. So by looking at this huge selling of 16.2 and 16.3 call options, the upper end seems to be 16,400, but still, because the market went to 16.5 and then came down, so technically 16,500 is a huge resistance for the coming week. And coming back to the support, since there was hardly any put writing, the people are keeping the downside open. But however, 16,000 is a psychological support, and at least for some time the bulls will try to defend that, and once that is broken, markets will again go back to 15,700 to 15,800. 15,700 to 15,800 is where the Nifty took multiple support. Then what is going to happen after that? It all depends upon the mother market, then US market. So what is going to develop and all those things. So FIIs will continue to sell more, and so as I told you, FII selling is going to be one of the worst in the history of Indian stock market. So the Nifty is likely to trade between 15,700 and 16,500. But many of my followers may wonder, how can I give such a big wide range? 15,700 to 16,500 is about 800 points. For 5 trading sessions, we are giving a range of 800 points. But that is how the markets move nowadays. It's becoming highly difficult to predict. And every day, for the last 1 week, I've been observing Nifty has been making more than 200 points either intraday move or from previous days close to today's high or low. And every day it makes a 200 point move. It's going to be very difficult to predict. So let us hope at least market takes some kind of a support. And I think this year definitely is not for investors. Those who are investing, last October it went to 18,600. Now we are struggling around 16,000. I don't think that there is any way Nifty can go back to 18,600. So anyway, I always say UK market, Hong Kong market, Japanese market, and China market. So these are the markets I've seen multi-year bear runs, typically for 10-20 years. And we have not seen any such multi-year bear runs So the only fear is that, it may happen this time. So, but who knows? In another 6 months, 1 year, if the US things settle down, the things may start rallying. That's a different story. But as of now, that looks very much possible. So that's it for now. Hope you enjoyed watching this video. Thank you for watching.